Thank you very much to everyone for meeting in this webinar that is dedicated to the COVID events and to their impact on the photovoltaic market. Now, things are changing and we are all coming back to the work, but these have been very difficult days and the impact in the market has been very, very strong, and we are here to see together what have been the effects and what will be their influence on the future. We have a very qualified panel of speakers today, and myself, Emilio Sani. I am a lawyer and I work in the renewable sector since 25 years, and I am here as a director of Italia Solare that represents the operators of the sun sector in Italy, and is very active in an action of verification of the policies concerning the renewable source for the energy and the new developments in the field of renewable energy in Italy. And the other speakers will be Marina Moreno, that has a big expertise in the sale about PV models, and now supports the Powertis business development in Italy. And we will have also Diomedes Dorfokis, that works in the investment activities of Foresight Solar and has a very wide expertise in the field of project financing. And also Gianluca Boccanera, that is in NextEnergy Capital and has a very wide experience in the renewable energy sector, where followed financing, construction, technical, administrative, financial, accounting, and fiscal issues. So together with them, we will try to understand what has been the impact of this epidemic and the consequences of on the market in Italy. We will start with a poll that to which we request to every one of you to answer. And in particular, this poll will be on the consequences that the COVID-19 in your experience has had. So we would be very interested to know whether COVID-19 reduced your turnover or affected the financing of the projects that you have ongoing, or in any case, delayed the activities that you have ongoing or the projects that you have under development. In particular, it would be interesting also to know whether the projects that were ongoing had stops for the connection to the net, and this could have significantly delayed the project. Also, another aspect on which we would be very interested to have your answers in the poll is whether, as a consequence of the COVID-19, you have been forced to renegotiate the ongoing PPA that you have in place. So please answer to these questions, so we may discuss about the result of this poll afterward in the Q&A session. Now, I start with my presentation on the impact of COVID-19 in the Italian solar sector. Okay, the Italian government implemented some actions as a consequence of COVID-19 that in particular have been the suspension of the administrative procedure for the connection of the PV plants and for the authorizations. Furthermore, the ongoing activities in the work sites have been stopped, as well as been stopped the activities in the factories that produce industrial materials, except for the strategic factories that were, for instance, the food factories. As a consequence of this, in Italy and in the other countries, there have been some issues in the supply of materials, as we will see afterward, and there have been some delays in the completion of the PV plants. But another consequence of COVID has been that considering the economic crisis, the government issued specific measures to protect the citizens that are in difficulties. So, for instance, if the residential clients do not pay the bill of electricity, the companies that sells the electricity may sue them for the payment, but cannot switch off the connection for the energy. And obviously, this is something that may create issues for the sellers of energy, because this is the best remedy that they may have in case of no payment by the clients. And the second measure that has been implemented by the government has been a delay that has been created for the payment of the taxes and of certain loans. So these kind of measures have been not a consequence in itself of the COVID, but as a consequence of the economic difficulties caused by the COVID. As an association, Italia Solare made a survey and a poll among its members on the consequences of COVID-19. The results of such poll have been that 75% of the members of the association had a negative impact from COVID-19, that more than 50% had a reduction of the turnover from 30% up, whilst the price of the components did not increase as a consequence of COVID-19. 50% of the participants to the poll had difficulties in the supply of the components during the COVID period. We also requested to our members what were the suggestions that they had to overcome the economic difficulties due to COVID-19. And they answered with different solutions, and for 53.9% of the members, the increase of the tax credits for the industrial companies was a good solution. 60.7% was in favor of the increase of the tax deduction for the purchase of photovoltaic modules. 53.9% was in favor of additional public grants to support CAPEX, and 44.9% requested loans with state guarantee. It's clear that the total is more than 100%, because many of them suggested plus than one option. And these were the suggested actions from our members. Well, what is the current situation? The current situation is that the supply chain is again operational according to the wholesaler. So now there is availability of the materials, in particular of the modules. For the inverters, maybe that there are still several situations of producers that have delay, but generally for all the components, there is availability of materials. The sale of the components for the residential market is currently on hold, not due to the COVID-19, but because in short time will be applicable the rules concerning tax deduction. And so people is waiting for such rules to start to install PV modules for residential market. So now the market is mainly restarting based on the industrial self-consumption. Also because there is an issue in obtaining the authorization for the big utility scale PV plants on the ground. So now the market in these months is mainly self-consumption for industrial clients. Okay, about what is very important and key to understand is that we had a stronger reduction in the consumption of the electrical energy in Italy. In March 2020, we had 10% less rather in the previous year. In April, we have a reduction of 70.5% in the consumption of electricity, and in May, a consumption of 10.5%. The consequence of this has been that the quota of the renewables in the market has been higher than 50%. So due to this reduction of the consumption, we had a very big increase of the quota of renewable energy in the market. Usually it's 35%, and in this month was 50%. So this had also an impact on the price of electricity that in these days is in between 20 and 25 euros per megawatt hour, and had an average base load price around 30 euros per megawatt hour, with an estimation for the end of the year around 36. So we have a value that is significantly lower rather than the value we are used to in Italy, that is in between 50 and 60 euros per megawatt hour. And this is very important. The consequences of this have been that for the PPA, the power purchase agreement, there is an increase of risk due to the variability of the price, and so bankability of PPA is very difficult. The incentives are the solution, but currently the incentive have too much restriction for the access to the incentives, and the authorizations are very poor. So the solution for the future, for sure, is to have incentives, but to resolve this, we need to solve the issue of the authorizations and of the issue of the authorizations. For the government, what is key in this time is to give a support to the persons that are in economic difficulties. So the government intends primarily to focus on initiatives that may support small and medium enterprises and local development. And so this is why, as we will see in the next slide, the main actions that has been implemented by the government now has been the tax deduction for the residential buildings, because this is a way to grant work also to small and medium enterprises, also in the energy sector. And to grant financial support in this difficult time, the first solution that has been granted by the government in the specific sector of the energy has been that the tax incentive may be easily transferred to the financing entities. And this is a way to have an easier financing for the projects that have tax deductions. As I was saying before, the main action that has been implemented by the government until now as a consequence of COVID has been the super tax deduction. 110% of tax deduction, so more than the value of the investment, has been granted for the investments in residential buildings for centralized heating pumps and thermal insulation. Why is this linked to the PV market? Because if installation of PV modules is linked to centralized heating pumps or thermal insulation, the tax deduction of 110% is granted also to the modules. And this means that the modules are for free in the residential buildings. What is key is that the building where such actions are implementing should self-consume at the maximum the energy, because the excess energy will not be tradable. To make effective this provision of the super tax deduction, the government provided the possibility to assign the tax credit. This means that the tax credit of 110% may be from the beginning assigned to the lenders. And this means that the PV plant, when it's joined with heating pumps or with thermal insulation, is completely for free, because the lenders will purchase the tax credit paying the supplier of the modules. If the PV plants are installed without the heating system or without the thermal insulation, in any case, they may be entitled to a 50% tax deduction. And this means that there is the possibility to pay, in any case, the PV modules with a discount of 30% if they are installed with immediate assignment of the tax credit to the lenders or to other entities. So this means that PV modules will be for free in residential buildings if are installed jointly with heating systems or thermal insulation, and will be paid with a discount of 40% if are installed separately. Shortly, the other post-COVID challenges are for sure the reform of the incentives, the reform of the authorizations processes, the start of the energy communities that may help to develop small plants with a very simplified access to the incentives, and the reform of the energy market in compliance with the EU directives. Okay, now I have completed my short presentation, and now the next speaker will be Marina Moreno of Powertis, that, as I was saying before, is very active in the sales sector, and now is following the Powertis business development in Italy. So, Marina, I let you.
Thank you for the
microphone.
Thank you, Emilio. Actually, can you stop sharing the screen so I can share mine? It's not working. No. Okay, perfect. Okay. Now. So good evening, everyone. I'm Marina Moreno, and I'm representing Powertis today. I work as Deputy Regional Manager of Powertis Italy. And today I would like to share our point of view about how COVID has influenced the Italian solar PV developers. First of all, and introduce Powertis so you can have a clear idea of our business model and affected us. So Powertis is a large-scale PV solar developer focusing greenfield projects mainly in Spain, Italy, and Brazil. We come with an overall pipeline of more than 6 gigawatts, which we expect to be already developed before the end of 2024. Powertis started in Brazil, therefore Brazilian projects are the ones in more advanced stage, as you can see. And we come with a project backlog of 1,200 megawatts already. So after Brazil, Powertis started developing in Spain. Italy is the most recent country in which Powertis has been introduced. Therefore, the projects are in more initial stages compared with the rest of the other countries. This is our business model. Powertis in the power sector comprehends the entire life cycle to active management of the assets. I would like to highlight some possible actions to minimize and control the pandemic effect regarding the first 3 stages of development, which are development, financing, and construction of PV solar projects. So as the projects are in early stages in Italy right now, we have suffered delays related to the processing of the projects. In order to facilitate the lost time, and in this way be able to achieve the objective of the Italian PNIEC, we propose a decree or national law that can speed up the Autorizzazione Unica procedures and connection with Terna or Enel. Regarding financing, there are new credit lines for this purpose, but from our personal experience, they have not really applied them yet, so it's taking longer than they hoped it could take, maybe. So we suggest maybe looking for financial investors right now, as renewables have become more interesting for investors with the support of the government, which is a key factor for financing. And about construction, I would like to highlight that, of course, our projects are not yet in construction stage. So we haven't really suffered in this stage, but if you were a construction company with, a development company with projects under construction, in the contracts, there's normally like a clause that allows you to expand the project's deadline. So with coronavirus, this clause would apply. So I don't think there would be any major problem, really. Okay. One second. Here. So our team. So in Powertis Italy, we follow a very dynamic approach as we work with local freelancers. And as the directors, we live in Spain. Also, as you can see here in the map, the local freelancers, they're all around Italy. So we're not close to each other. We don't have like an office where we're all together. As you can imagine, we already applied home office since day one. So with the arrival of coronavirus, we were more than prepared. Working with a marvelous team of local freelancers has been key factor for this success, as we were able to move more easily, always having into account legal regulations, of course. But this small thing gave us competitive advantage versus our competitors who struggled more in case they had their office and workers in Milano or Rome, for example. I wanted to share our activity in 2020. So in this first graph, you can see the number of interconnection requests we have done since January to June. And these interconnection interconnection request is equal to this number of megawatts. So we're able to close lands and send interconnection requests to Terna or Enel without any problem. In Italy, we started sending interconnection requests in December 2019, just before coronavirus officially arrived to Italy. Even during the most complicated time of coronavirus, we were able to send in total 16 requests of interconnection, which add up to 482 megawatts. Okay, 1 second. Portfolio overview. So this is the Powertis Italy portfolio right now. You can see our vision. So today we come with a pipeline of 1,169 megawatts of solar PV projects in different stages of development. 182 megawatts are already secured with granted interconnection rights. 592 megawatts have land and requested interconnection rights, and 395 megawatts are in advanced stage of negotiation. With coronavirus, we basically, thanks to our team, we did not have a problem closing the deals with the landlords, but with elder landlords, it was more complicated because it's very important, the human contact. But as you can see, our pipeline has been incredible. We are very, very happy with our achievements, and we want possibly to start expanding now into the north of Italy, Lazio, Molise, Abruzzo. And this is basically our insights about how coronavirus might affect a solar PV developer. Thank you very much.
Thank you a lot, Marina. It was very interesting and impressive how many megawatts are you developing in the south of Italy, and for sure the numbers of connections that you achieved is very high, and it's the key point today is to obtain the authorization in Italy, and because differently from Spain or other countries, the obtainment of the connection to the grid is the first step. But unfortunately, in Italy, there is a very long way before the obtainment of the authorization, because the environmental impact assessment are very long. And the COVID-19 for sure did not help in shortening the duration of these procedures. However, now it's very interesting to know what is the opinion of the Powertis of Foresight Group that works in the investment activities of the Foresight Solar platform about all these items. Thank you, Powertis.
Thank you, Emilio. Thank you also to BS Group for being for having invited us. Let me just bring also and project the presentation to you. Apologies, just a minute. So on our side, I think the objective will be to give you an overview of our investment activities and how we have been evaluating the current situation of COVID-19 in Italy for the Italian sector, both for what concerns subsidized projects, which are part of our investment activities under Survey 1 and Survey 2, sorry, and also to consider what are the greenfield financing opportunities that Marina illustrated, for example, on greenfield projects and development projects Just a minute, sorry, just to give you. I don't know if you can see the presentation on the screens. Yeah. So, in a nutshell, Foresight Group, we are an asset manager. We have around 5.3 billion of assets under management, out of which 4.7 billion are dedicated to the infrastructure, what we call a renewable energy infrastructure sector. As of today, we have roughly 2.2 gigawatts of total renewable energy assets under management. And out of this 2.2 gigawatts of generation, almost 1.4 is in solar. This brings us to be one of the largest solar asset managers in Europe. Clearly, this expertise has been developing across the years on the basis of what were the incentives and the PV plant penetration across, let's say, continental and Europe and the UK was highly incentivized, and clearly that is how the majority of the growth came. But in that presentation, where you can see the split of our solar assets, you can also see that we have roughly 102 megawatts in the Iberian Peninsula between Spain and Portugal, which rather than being subsidized like the ones that you can see in Italy, they are instead on market parity. That therefore means that clearly solar energy, as we all, everybody that attends probably this webinar knows, is absolutely ready to embrace, let's say, free market economics with currently the possibility either to have a PPA, whether it is different types of PPA. And again, without going too much into details, we'll basically speak about either physical or financial with the subdivisions that they have, as well as the factor that part of our pipeline is being constructed without any sort of contractualized revenues, and there's a kind of open view, an open assessment of what is the so-called market risk for solar capture prices. However, this in Italy that we make reference clearly is a different situation. As we have seen in Spain and Portugal, we have been amongst the first investors to close a corporate PPA. Actually, we closed the first ever corporate PPA in Spain for 10 megawatts with ArcelorMittal. Whereas in Spain and Portugal, clearly the solar market parity kind of segment is well established, and we can say there is a relatively liquid market. Unfortunately, yet in Italy, first because of the fact that we do not have yet so much installed capacity ready to build projects for market parity, but most importantly because yet there are still some bottlenecks for what concerns the liquidity of the market, of the corporate PPA market, and especially of the so-called, let's say, electricity exchange market. We do still a gap for what concerns market parity projects, and that gap, if I can specify it, it is mainly also in relation to the lack of financing and the fact that, if I may say, there's a kind of bid-ask spread between what is the current status of the market, especially for developers and EPC contractors, and what is the current expectations of the market on the side of institutional investors and financiers, lenders. As a result, by having done some analysis, and in that respect, I want to point out that Foresight Group, as an asset manager, we have been also active in what concerns not only the equity market, but we are also a fund manager in Italy of a Luxembourg closed-end fund that provides direct lending to renewable energy projects and energy efficiency projects. So we have both the capability to provide equity and debt financing, and we allocate this kind of capability, and we allocate this market when it comes to solar on a 30 million threshold. That is to say that for projects below 30 million, typically we utilize our debt fund because it has a specific focus on small, medium, small scale renewable energy and energy efficiency projects. We have already done 5 financings, out of which 2 were for net metering assets, solar net metering assets. So already we have some knowledge in the market. Whereas even when we speak about larger than 30 million projects, typically our equity funds can act and are the ones to be deployed. Having said that, the current situation that we see in the market, or especially following COVID, which made evident the kind of difficulty that projects have in securing long-term PPAs, is the fact that, as you can see on the slide and on the left-hand side, the chart that is on the left-hand side, there is the majority, almost 90% of the projects over 30 million typically have an access when it comes to the traditional project finance lending. Whereas when it comes to below 30 million, also because there is a kind of illiquidity situation, let's say there is a kind of, if I may say, too small ticket, to call it this way, for traditional lenders below 30 million, this situation almost inverses. So majority of the projects cannot access bank project finance facilities. The reason being that the projects are too small, but also the reason being that from our analysis that we made is that the market party projects clearly per megawatt have a considerably lower capex. It is pretty obvious that, and it's something that of course the whole industry is very happy about it because it brings the levelized cost of electricity down. But at the same time, in Italy, you don't have the type and size of projects that you see in Spain, for example. So single projects due to land and mainly connection / network, let's say capacity available space. They typically have a smaller scale, let's call it below 30 to 40 megawatts on a single project basis. As a result, with this type of capex, you would see something, a total capex per project around 20 million, 25 million at best. And as a result, then with the leverage that you would expect, which traditional lenders would be providing around, let's say, 60% leverage, let's do some ballpark calculations, you would see that this, at the end, this means you have a project financing of 13, 14 million. This clearly makes the situation not cost efficient for a typical project financing. In addition to that, again, majority of lenders who have a project finance desk would be looking to invest at least 20 to 30 million per single transaction. And this means that there is a plethora of projects and developers who, both because there is an illiquidity in the market in terms of the lack of PPA supply, as well as because of the small tickets, will not be able, unless they have a full equity scenario in their mind, they will not be able to access traditional project financing. That was one of the main reasons that helped the deployment of utility scale solar in Italy. And if you recall, years ago we had the leasing financing, which was another instrument that Italian banks mainly utilized and helped spur the growth of the Italian solar sector. As a result, in response to this kind of financing gap, our focus would be to try to provide an alternative source of lending in the form of, we have done it in the form of green project bonds basically that are certified green. They are listed in the Italian stock exchange and they are subscribed by our fund or by institutional investors. But most importantly by our fund, because we don't have that issue of scalability. We are not driven by arrangement fees like typically project finance lenders are driven. We are driven more by the fact that we have a diversified portfolio and our fees apply on the fund management, on the fund size itself rather than the single transaction. This means that we will have the capability to deploy, to provide financing directly to project companies and developers, even at sub 20 million tickets. Typically, as of today, we have done 5 transactions. Average ticket has been around 10 million. So this gives you a bit of a feeling of what we would be looking. Now, what are the kind of structuring elements and considerations that we would need to consider in case we would provide an alternative, a complementary, let's better call it, source of financing versus typical project finance? The idea is that here clearly we would have, and we have done a risk analysis, we would have different set of parameters than a typical project financier. Clearly, if we were looking what would be, and you can see the 4 columns, we see kind of 4 different types of risk return profile across, let's say, traditional senior debt, and let's say the what is on the right hand side, the equity kind of return and analysis. Clearly, between the two, we see a space for alternative lenders like us to provide something that is between a senior and mezzanine financing, to provide a financing that therefore has lower debt service cover ratios versus a typical 1.5, 1.6 debt service cover ratio that a lender, a bank would provide on the basis of contractualized revenues with some merchant tail. In our case, we would be able therefore to provide, and we will see a next slide where we did a case study, we would be able to provide, not to require, better to say, a PPA in place, therefore to take some equity type of risk in terms of the merchant price and the merchant element, to provide financing that is fully amortizing long term, so not a kind of bridge financing, because we also think that the type of bridge financing that typically has a 2 to 3 years tenor and needs to be refinanced post-construction is not something that would work for market parity projects, because it is based on the assumption that post-construction there is either a PPA or there is a ready, let's say, a ready to acquire investor. Again, without a PPA, without a liquid PPA market, we don't think the institutional investors are by themselves able to absorb all the market parity projects that will come to life. So we do think that you need a long-term financing that of course can be repaid, but at the same time has a bit more aggressive debt service cover ratios, has a substantial its revenues outside the feed-in, outside the whatever, if there is a PPA in place, and is at the same time, let's say, closer to a mezzanine financing. So if we would try and to illustrate an example that we did for a project, and we have already a wind transaction that we're looking under this kind of structure, we would see, whereas in a typical project here we have an example of a 50 megawatt PV plant. Clearly, it is a bit on the high scale, but it could be, in our case, as I said, we have flexibility, so it could be like a 20 megawatt PV plant. The proportions are the same. Apologies if the figures are a bit small, but I will try to illustrate them to you. In essence, if we would have this project, we will have roughly 41 million of CapEx, including all the development EPC and connection. A typical project financier, a traditional lender, would, with a 1.2, 1.3 on a very low scenario, would give roughly 23 million total debt over 41 million of CapEx. As you can see, this is a relatively low leverage, and whereas we would be looking to increase that through the mezzanine kind of portion incorporated within our senior financing. So in a way, it is as if we take the senior financing and we stretch it up to a level that it carries roughly a 70+% of leverage. This clearly would have a cost that could be, of course, adjusted. We could have a different cost of capital, the cost of debt that goes upwards as time passes by. We increase the cost of financing, but at the start it could be at a lower cost than what we saw. And this would be structured over an 18 years tenor with the possibility to prepay with some prepayment penalties, but then after year 5 we will not apply any prepayment penalty. And the average cost of debt or lean cost of debt would result to be 5.5. Clearly, somebody might argue, why would I go and do a 5% financing if I can go to a bank and do a 2.5, 3% financing? I think the answer lies to the fact that the conditions precedent and the bankability criteria of traditional lender, we have seen in Spain lots of an increased number of banks being active on a pure merchant scenario. For example, we know Banco Sabadell, BBVA, and I think also Santander, amongst others, have been quite active. But then it is not yet the case here in Italy. Clearly, if Italian banks become more available to take pure merchant risk, I think, of course, the situation will change and will be more favorable. But at the same time, we do think that even if banks would come in on the pure without PPA kind of segment, we do believe that there would be an issue for what concerns the minimum ticket and the transaction cost. You need to have a bit lighter due diligence approach. Being as an equity investor clearly helps the fact that our committee is the same committee that we have on our equity funds. We simply take a reduced, if I may say, for the same type of risk, we take a more risk-averse kind of stance, and we try to take a more prudent view. But in any case, it helps us the fact that we are an equity investor. Clearly, we will not have the same kind of rigidness, if I may call it this way, for what concerns financing market party projects. So at the end of the day, we think the factors for stimulating the growth of the market party, let's say, segment in solar in Italy, it's first bureaucracy, clearly, which I think it's the obvious. And the second, I think we do believe it's not necessarily having a liquid market PPA kind of segment, because this might take time, especially now due to COVID, due to the fact that people understood also that prices have volatility, and also the economic cycle is not as resilient. Already there was doubts about the Italian economy, so we understand there might be some concerns over that in the medium short term. Having said that, we do believe the financing solutions, especially from alternative lenders like us, need to step in and provide this kind of solutions that are not traditional. Clearly, it is something that we will see how it develops in the market. And we are overall, of course, long-term investors. So it's something that we try to plan on the long term and have a kind of, if I may say, resilience over the short-term shocks that we saw in the past months.
Okay, thank you, Diomedes. Did you finish your presentation?
Yeah.
Okay, thank you a lot. It was a very interesting presentation, and we take note of all the difficulties that there are in financing big projects in Italy, and we will come back on this topic also afterward in the Q&A and discussion section. Now, two notes. The first is that we have a question for Marina in the Q&A that is related to the trackers and the delay in the supply of the trackers. So if Marina, you give a look to the Q&A session, maybe that you may type your answer, and afterward we discuss it in the Q&A session. In the meantime, we launched the results of the poll that now I believe that should be presented. Okay, so for 6% of the participants, the COVID-19 reduced the turnover. Just 1 second. One second that I lost the window with the results. Okay. And for 31%, the financing of the projects has been affected by the COVID-19 issues, and 50% is the number of people according to which the COVID-19 delayed the activities of the projects under development, whilst just for 2% has been stopped the connection of projects already being completed, and renegotiation of ongoing PPA is something that occurred to 11% of the people that answered to the poll. So these results are very interesting, and so it appears that the main effect has been the delay in the activities of the projects under development. Now I believe that Gianluca Boccanera, that works in NextEnergy Capital and has a wide experience in the field of development of projects in the renewable sector in Italy, may deepen this topic of the delays in the development of the project, and may give its point of view on all these COVID-19 consequences in our market. After the speech of Gianluca, we will see the second poll, and we will discuss the items that have been raised until now.
Thanks, Emilio, and good afternoon to everyone, and thanks also to BS Group for inviting me to this webinar. it's very interesting, the outcome of the, because I think that it comes from mainly the status and the stage where almost all the investors and developers are at the moment in Italy. So I think that everyone has experimented the delay in the authorization process of the projects on which we are working all. And this is exactly what happened also to us. But just as a brief introduction of myself, I'm a managing director of NextEnergy Capital, responsible for the Italian team, and I'm within NextEnergy Capital since 2008. And I've gained experience in the sector, mainly working for NextEnergy, which is now one of the leading investor in the solar space. Not only in Europe, but most recently also in other countries, with over 160 people within the team and 3 funds at the moment under management for 1.5 billion euros and 1.2 gigawatts of assets, mainly in the UK, Italy, and most recently in US and Mexico. Part of the group is also Waste Energy, our operating asset manager, which is managing all the assets where our funds have invested, but also providing operating asset services, asset management services to also third-party clients. This is why Waste Energy is now managing more than a gigawatt 0.7 of solar assets in Europe. Going back to the impact of COVID-19 on the market fundamentals here in Italy, most of the things has been already highlighted by Emilio in his presentation, but it's worth to mention that probably what we have seen in the last 2-3 months has been something that has put us into the world that we will probably see in 10 years' time, because we don't expect that the energy demand will drop dramatically, but I think that going forward we have to cope with the increase in the renewable energy penetration and contribution in the energy demand, and this will lead for sure to a sort of pressure in the energy prices, which we have seen really dropped in the last 2 months due to COVID-19. And at the same time, we have seen the uplift, i.e. the cost applied by Terna for managing and balancing increase to an unprecedented level of almost 20 euros per megawatt hours, which has created really a new impact and trends on the market. If we try to see the recovery expectations, and we have gathered indication from our market advisors, I think that there is a general consensus for the demand to recover to the level where it was before the COVID-19 in 2021, 2022. Because this year we will see that the energy demand drop below 300 terawatt hours level, which is a level that we haven't seen in the last 10 years in the market. And you can see that the electrification of consumption is expected to have an impact in the increasing the energy demand in the market. And in the same time, we see penetration of renewables into the energy production, which will lead to a downwards movement of the energy prices. This is why the general expectations of the key market consultant is that the energy prices are expected to grow at least and recover after the drop that we have seen in this year. The recovery is expected to come between 24 and 25, and then the average price, the national price is expected to remain stable per megawatt hours. And this situation, what entails in terms of solar installation evolution, the fact that this year we will see a slowdown in the installation of new plants due to COVID-19 for partially, but mainly for the delays in the authorization process. Our expectation is that the PNIEC objected to add 31 gigawatt of new solar plants by 2030 would be really hard to hit. And most probably we could end up to have roughly 35 gigawatts of total installed capacity by then, which is something that leave us a little bit behind of the targets that have been set also at the European level. But it was already clear since the very beginning that the targets set by the Italian government was hard to achieve, considering the regulatory situation and in general the way how the plants are authorized here in Italy. This is for sure a pity for the country of the sun, and where we could even go beyond what has been set at the central level. But it is what it is, and all the operators has to cope with that and try to do their best in order to overcome any constraints and regulatory issues that they are facing during the authorization process. Moving to alternative finance, in this context we have started to test. I think that I can bring here the experience that we have gained in the UK, where we started 1 year and a half to develop grid parity projects with an internal team, and where we have structure this new type of product with Santander, which provided us with 100 million pounds to finance the construction of a portion of our pipeline of assets under development, 415 megawatts. And this short-term debt will be used by us to bridge the capital raise of a new fund, which is now on the market for grid parity projects without subsidies and without any PPA, so pure merchant risk. And we have seen, pretty good interest coming from equity investors for starting to invest into pure merchant projects compared to the usual approach for having subsidized assets in many different countries. And the first 100 million pounds will be mainly invested in 2 assets, fully developed by us. First one, 75 megawatts already under construction, which is expected to be the largest solar subsidy-free project. And the other one is another pretty big project of 30 megawatts, again already under construction. And both plants are expected to be connected by the end of this year. So the strategy here for us, not only in the UK but also in other countries, is to continue to look for investors and try to make them more comfortable in investing in a new world without subsidy, which is something not so easy to do, but as you can imagine, it's easier to convince an equity investor to invest in subsidy-free or even in projects with short-term PPA than any other bank. So the idea behind that is that you know, a project without that is less riskier than project with a debt in a context where the returns now are well below the double digit. So the idea and the strong, you know, the strong confidence that we have is that going forward, anyone that wants to invest in solar or in any type of unpredictable source of energy has to start to put together different technologies and just not relying on the pure sale of electricity, because in this way the risk is that these plants could be curtailed or could have the electricity valued at zero or even into negative territory prices. So it's a risk that we have seen has become real already now, because for some hours of the year we have seen already our operating plants in Italy having a price equal to zero in Sicily, and unless we don't start to invest in other technologies, first of all, and overall the storage, the risk that we are facing is that these plants will have difficulties in reaching the targets in terms of revenues and then in terms of returns. This is how we are structuring then our strategy and also the way we are building our business, which is expected to be more industrial going forward and less financial. And in this aspect, you know, we are well positioned. Consider that internally we have an operating asset manager which has a long-standing experience in the sector since 2007. This is pretty much it from my side. I'm really looking forward to seeing the questions and answering to them. Thanks.
Thank you. Thank you a lot for this very interesting speech. And now we launch the second poll that may be launched, yes, on the screen. I believe that there have been some items that have been raised by Gianluca that are very interesting. In particular, he raised the item on how to achieve the target of 2030, and the item of the fall of the price, of the day-ahead price, and the increase of the price in the dispatching market. I believe that this is some way a signal of the fact that in the Italian market, not only for the obtainment of the authorizations, but also in the organization of the Italian market, are necessary several reforms to allow the PPA diffusion. And now I would like just to introduce the item that in these days, after the COVID-19 events, is under discussion. I believe the most important law for the future, that is the law for the implementation of the EU directive about renewable and about energy market. And jointly to the discussion of this is under discussion a decree in order to simplify the procedures for the renewable energy. And the views that are circulating in these days are that for the authorization, we should some way change our view, and we will not have the unfit areas, but will be some way individuated a list of fit areas. That is a complete change of view, and the government should give some framework on what could be the fit areas that ideally should be areas where the best solution is to install the PV plants because they are not so fit for other activities. So this is the current view that is circulating, and that is also written in the proposal of the government for the implementation of the renewable directive. And a second view that is circulating in these days, but that is also reflected in the planning documentation, that is the national strategy and the national plan, is that in Italy, due also to the landscape of Italy, the number of small plants that have to contribute to the achievement of the goals of 2030 should be significantly higher rather than in other countries of European Union. And in following this view, now the strongest measures that are under implementation by the government are, as I was saying before, the measures that substantially makes free the purchase of PV plants for residential use, and the other measure that allows the incorporation of energy communities in the villages and in the neighborhood, in the towns, and the plants that join to these small communities have special incentives that are granted in an easier way rather than the incentives for the big plants. So now, as a first round, also following some questions that I received before the panel, I would like to share with you if you consider possible to have investments also in sets of small plants in Italy, and not only in singular big plants, because we have to consider that there are these policies in Italy that encourage the small plants much more than in the other European countries. So I would be interested to have your view on the possibility to invest and finance sets that collect these small installations. So we can make a round and we follow the same order that we had before, starting with Marina. Or if there is someone other, we can start from Marina. We can start from you if you are okay.
Yes, of course. Can you repeat the question, please? Sorry.
In Italy, I was saying that now is ongoing the process of implementation of the European Union directive. And the view that is coming out is that for the big plants, there will be not anymore a list of unfit areas, but a list of fit areas. And so it will be rather fenced, the territory where big plants will be built. And the idea is to have a very high number of small plants to support the achievement of the 2030 goals. So my question was, from the point of view of the international investors, whether big sets of small plants could be interesting in the same way of one singular big plant, because these sets of small plants would have incentives and so would have revenues much safer rather than the big plants.
Hello, Emilio.
Yes.
Sorry, I'm having connection problems.
Okay. So maybe that we start with Diomedes.
Yeah.
Okay.
No, in reality, that is so for fund managers, maybe if I can be a bit very explicit and very direct. Clearly, let's say on the financing side, and we saw also from Gianluca's presentation, the ticket is a very important aspect, or that is to say, the scalability of the project. However, on the other hand, and that is why when we started the what we call the Italian Green Bond Fund, which we initiated in 2018, we got support from the European Investment Bank, because exactly we would be targeting, and we are targeting small scale projects below 10 million. So we do think it depends on the type of financing, and it depends on the type of investor. But that various reasons, especially structural reasons of the market, a small scale, let's call it small scale. Of course, I'm not making reference to residential. I'm making more reference to commercial, industrial, etc. So, and community, let's say, scale solar, is necessary in order to add, let's say, to reach the target of 2030. However, to be honest with you, I don't think that this will happen easily without any form of traditional banking. The reason being that you can understand that or alternative to traditional banking utilities. The reason being that financial investors were much more focused, unless we speak about a very niche strategy, we're very much focused on scalability. So definitely there is an attractive segment because of the returns. There could be some sort of support mechanisms, whether these are tax credits, whether this can be any other form of superammortamenti, so on and so forth. However, I think we need to be honest that for large scale, for institutional investors, large scale projects and scalability is key. And it is also related to the lower cost of capital, this kind of story, because economies of scale allow us to bring down the LCOE and so on and so forth. So there's a number of things interrelated. That is not, though, to say that there is not a substantial opportunity in small scale renewables. There is not a need for more inclusive models meaning with local communities, etc. And they are also, also for traditional financiers, there is also an opportunity to access that. It's an underserved market, that is to say, that needs to be, that offers an opportunity, but it needs a very specific type of funding. It's not the kind of the Foresight or NextEnergy listed fund that can do this easily, that this type of investments, because in the meantime somebody needs to them and create that critical mass. So I think that that's a bit the bottleneck.
Okay, thank you a lot. Now we can hear the view of Gianluca on this.
Yeah, I fully agree with Diomedes that it is a completely different business model that has to be put in place, and this is why, for instance, in the UK, but also with the new fund, we have started to invest into smaller scale plants, but only at the industrial level. We haven't still invested at the residential level because this requires to build a different model. But at the same time, considering the specific situation of Italy right now with the super bonus just approved and to be implemented, I think that we can see the new market opportunity coming out because of the possibility to transfer the credit and also to benefit from this transfer in order to implement interventions at a residential level. And in this context, we have started to study the possibility to enter this niche, even if again this requires a new business model. But in general, the small scale plants are something that is under our radar screen, and this could be also highly pushed, I think, in general, because of the morphology of the Italian peninsula, which is not the same of other countries like Spain or others, where we could install large plants over 100 megawatts in many places, and we really are in favor of trying to use in the best way the Italian landscape in order to reach the target. And in this way, and in this context, we are trying to to position ourselves at least also to invest in industrial type of installation, and this is why we have also in our pipeline of projects under development also a line of installation on industrial rooftops. And also, as I said, we are studying the possibility to put in place a new model for also try to support the initiative taken by the Italian government to push for an increase into residential installation, because again, if we can reduce the soil consumption, I think that it's a result which is of benefit of anyone, and we are really in favor of that.
Thank you a lot. I remember that we have ongoing the second poll where we are specifically requesting whether to overcome the difficulties due to the COVID and the economic crisis, what we consider to be the best solutions. So now the alternative that we are presenting are whether the best solution is a super tax deduction that has been already approved by the government, or the start of the energy communities, or the simplification of the authorization process, the reform of the incentives, or the reform of the market mechanism. The answers that we got are that for 10% of the people, it is the super tax deduction, the main solution. For 6% is the start of the energy communities. For 41% is the simplification of the authorization process. For 31%, the reform of the incentives, and for 12%, the reform of the market mechanism. Now, this is interesting because I believe that we understand that for most of the attendees, the answer is the simplification of the authorization process. Obviously, we must consider that in Italy, under the strategic policies of the Italian government, simplification of the authorization process does not mean necessarily that the greenfield projects will be approved, because the simplification of the authorization process will be for those projects that are considered as fit from the Italian government. And the recent views of the Italian government are not favorable to have the possibility to build PV plants wherever in Italy, and in particular not to replace agriculture with PV plants where agriculture is ongoing. So this is very important to be considered, because for the view of the current government, this is an important item, and also at the regional level, this item is raised anytime by the office in charge of the cultural heritage and protection of the landscape. So simplification of the authorization process does not mean necessarily that utility scale plant will be in a faster way. Maybe also the contrary, that it is fenced what are the plants that may be authorized, and some way clarified where you can and where you cannot. So in my view, it is important to have a set of different solutions for the investors in Italy that combines utility scale plants where the plants are installed in places that do not affect the landscape, small projects at the level of energy communities, rooftop installations for industrial use, and now there is this big tool that is the super bonus, and for the investors in Italy, as Gianluca was saying, currently this is the main opportunity to have a business, because there is a huge amount of money that will circulate due to this. However, on this, I believe that we can have a very quick final round. And Marina, if you have a good connection, we may start from you.
Hello, Emilio. Yes, I think now it's working. Can you confirm, please? Okay, I'll just take my video out for a second, because I think it really gets my connection bad. So about the previous question you were asking, I'm totally in the same line as Gianluca and Diomedes. I think Italy is increasingly demanding more smaller plants. And I think that because, well, Italy takes into account very much environmental conditions, and also they are, if they are maybe close to the population, it's very important to try to take those plants to smaller dimensions so they can be more environmentally friendly with the population. And definitely, I think the investors will be interested in getting big packages of these plants, because in the end, it's the tendency of the market, and we cannot go against it, but just go forward with it.
Okay, thank you a lot, Marina. And we shortly have the final view from Gianluca and Diomedes before the end of our panel. Thanks. Gianluca?
Yes, I can probably also answer to one of the questions that I see we have received to know my opinion to the agrovoltaic type of installation, which I have some doubts, to be honest, with all of you. And this is also the position that we have taken internally to not pursue any opportunity that has this configuration, just because we believe that in Italy there are enough unused or industrial lands available for even going far beyond the targets that have been set by the PNIEC. This is why we have focused our attentions on this type of lands in implementing our strategy for the new projects under development. And I know that there are several other operators that are pursuing this model, but this is our view on this specific topic.
Thank you a lot. So we have the final from Diomedes. Thank you.
Yeah, I think we more or less have the same view with, let's say, have the same view with Gianluca. To be honest with you, currently, as Foresight, in terms of development, we are looking on the equity side. I'm making reference. We don't have any proprietary development undergoing. We are much more focused on Spain and Portugal for the time being on that front, being, as I said, more active in liquid markets. On the debt side, we are happy to see all types of projects, or even on market party, as I mentioned. I think we do not have any sort of limitation in that respect, provided, of course, the due diligence, everything which we typically perform, it's positive. So when it comes to development, I think in Italy, we were to have a clear view on the equity side. I think we have seen that in general, agricultural land presents some issues. On the other hand, industrial land, it's quite expensive, so the market economics are not ideal. That is why probably you see me, not that we are not positive about market equity side of market party in Italy. We just, given the type of funds that we have, etc., we think the market is a bit better positioned now in Spain, even though there is more competition. In Italy, we think the debt financing, we see a more important gap for when it comes to debt financing versus equity. That is not to say that we don't see on equity a gap, but clearly on debt financing we see much bigger room for, let's say, more flexible type of solution. I think that's the view. So if from a debt financing, just to conclude, we are very flexible. We can do even small scale projects, and of course both agricultural and industrial land. On the equity side, I think it's a bit more, we are more selective, and still we are evaluating how to view the market. We are looking at developments, but yet we are not, we are ready to commit, but we are very also attentive on the quality of the projects, because it's a bit more complex a situation than it might look.
Okay, thank you a lot for everyone and for this very interesting discussion. We have concluded our panel and discussion, and I hope that we will have again the opportunity to discuss all this all together.
Thank you very much.
Thank you. Bye.
Thank you very much.
Bye-bye.